Welcome back to EDS, and in this video we are going to take a look at some of our positions, see how we can manage them, how you can apply those lessons in your own portfolios, and overall increase returns and reduce risk. So, the first thing we want to do when we talk about positions and managing risk is position sizing. So, we have a position sizing template here that everyone can get a copy of. I'll explain at the end of the video how you can get a copy of it. Basically, the way it works is you just put in your portfolio size, you put in what the current VIX level is, and then everything will be calculated for you. So you can just follow the numbers here as a guideline to create the backbone of your portfolio, basically. And then obviously you've got an explanation. So the first thing is, when it comes to managing positions and managing risk, is you need to control the size of your position upon entry. And one way that you can do that and manage everything is by using a spreadsheet like this. So once you've got your position sizing correct, what you want to do is just have a look at your portfolio. So the broker that we're using today is called Tasty Trade. However, it will look similar for whichever broker it is that you use. So as you can see here, nothing is in the money right now. If it was in the money, it would be stated here with a little ITM symbol. So nothing is in the money right now, which means that everything is working perfectly as it should, and we don't really have anything to worry about. But we're going to have a look at everything on a position by position basis. As you can see, the market is currently closed right now. It is a Saturday. Saturdays or Sundays, I do like to just do a little portfolio review. So first thing we've got is the Australian dollar futures. So let's have a look at the chart and see where we are. So as we can see here, we've got our short call up there. We've got a short put down there. IV rank just seems to be kind of moving sideways. And we've still got 97 days left on that position. We've only been in this position for 3 days. We're basically at break even. Nothing's really happened yet. So we just need to give it more time. And in most cases, what you'll find that you just need to do when it comes to managing your positions is just give it more time. There are some times where you will need to make adjustments, but most of the time, it's just a case of being patient. And that's exactly what we're going to do here with this position. So next up, we've got the Euro futures. Let's take a look at that. As we can see, we've got our short call way up there and our short put way down there. Again, volatility seems to just be moving sideways. The market has moved down a little bit, but it's nowhere near our strikes. Again, we've got 97 days left in this trade or on the contract. We've only been in this position for 4 days. So again, this is just a case of waiting to see what happens. And more likely than not, everything will work out in our favor. So next we've got AMD. Of course, we had the Nvidia earnings this week. So hopefully volatility did come down a little bit after the announcement. So we've got AMD. Let's take a look at AMD. This is an iron condor. So right now we've got our short call at 185, and we have our short put at 134 or 135. Sorry. And currently price is at about 148, 149. So we're within the range. Obviously, price has moved a little bit since we put the position on. We put the position on around here. Price has come down a little bit, but we're still within our range. Our strikes have not been breached. If you look at volatility here, it is coming down, which is perfect for us. That's exactly what we want to see. Again, AMD, this is a position where we literally do nothing and just let everything work itself out. So AMD, all good. We're not worried about that. We are up 11% on that position at the moment, and we'll probably be taking profits at somewhere between 25 and 50% on that position. CMG, let's have a look. We are down a little bit on CMG. Let's take a look at the chart. So you can see we've got our short call here at 60 and our short put at 45. IV rank seems to just be slowly coming down, which is fine. Price has moved slightly higher since we originally put the position on. But again, we are well within the range. Of course, the reason why my P&L is slightly red is because of the call side here. We are closer than what we would like it to be this early on in the position. We've still got 48 days left. We've only been in the position for 11 days. So we still do have plenty of time left, and we'll just have to wait and see what this coming week brings for us with the CMG. But right now, there isn't really anything that we can do. We can roll the put side up a little bit if we wanted to bring in a bit more credit, a bit more premium. I did mock up this position a couple of days ago, and we were looking at about 47 cents. Now it's at 32. I probably wouldn't be doing this roll. The spreads were less than desirable when I was having a look. That's why I didn't actually roll up the put side. However, this is an example where you could roll the put side up. The put contract is at 60% profit. So, yeah, but right now we're not going to do anything with CMG, but you can do some stuff like that, some more funky stuff to boost your returns. Next up, we've got GDXJ. We've only been in GDXJ for 2 days, and we've still got 48 days left. We're already at 13.1% profit. Beautiful strangle on GDXJ. Let's have a look at the chart. We're here at 52, and we're also at 42. So 42 and 52, price is currently at 46. I mean, this is perfect. IV rank seems to be coming down a little bit. We're right in the range, right in the middle of the range. Price seems to be moving kind of sideways-ish recently. So GDXJ, I'm not worried about this. This is a beautiful trade, and we are already in a healthy amount of profit just 2 days in. We'll probably let that run to about 50%. Next up, we've got GLD. GLD is a iron condor. We've had this on for longer than GDXJ. We've had this on for about 11 days. Still got 48 days left in the contract, though. We are at about 21% profit right now. And we could take this off soon, or we could let it run. We'll probably just see how market opens on Monday. But GLD right now seems to be doing well. Let's take a look at GLD. As you can see, it says similar-ish picture to GDXJ. Of course, they are obviously going to be correlated somewhat. So we have our short put at 222 and our short call at 250. Price is currently in the range. Volatility is coming down a little bit, and we're well within our strikes. Again, nothing to worry about here. It'd be interesting to see the difference between GLD and GDXJ. One's an iron condor, one's a strangle. It'd be good to see the difference in theta decay on both of those positions. But for right now, GLD, nothing to do there. Intel, let's have a look at Intel. We are down 32% on Intel currently. Let's take a look at Intel. So 17 and 25 are our strikes. Okay, so 25 there and 17 down there. So the reason why is because we've had a little bit of a pop in volatility, and also the market has gapped a little bit. So as you can see, it has been in this tight little range here, and now it does seem to be moving towards the call side. But again, we are still very within our range, and we just need to let theta decay a little bit more. We've only been in this position for 11 days. We've still got 48 days left. So I would not be rushing to make any adjustments on Intel. There's actually nothing wrong with this position. It's simply just a young position, and we just need to let it mature a little bit. So Intel is completely fine. LUV, which is Southwest Airlines, we are currently up on Southwest. We're up 16.1% at the moment. We've got 48 days left in the contract. And we've been in for 5 days so far. So let's take a look at LUV. LUV here. As you can see, we've got a short call here at 32.5, and then we've got a short put at 25. Price has been kind of moving sideways recently. And to be fair, volatility has come up a little bit, but price hasn't really moved anywhere. And we are up on the position as a whole. This trade here, I feel very good about this trade. I think we'll be completely fine. IV rank, we're at 62.4, so not worried about LUV at all. Again, it's just a case of letting theta decay and do what it needs to do. Coming to the end of the list, mRNA. This is our latest position that we've put on. We put this on a day ago, and we've got 48 days left till expiration. The IV rank was just too juicy. I couldn't say no to it. We were looking at a strangle. However, we ended up placing a iron condor in the end, just due to efficiency of the buying power when it comes to covered positions as opposed to naked positions. If you do want to look at the analysis of how we found that trade and what we, a little discussion on that trade, do check out the last video. We looked at it in there. But for right now, let's take a look at the chart for mRNA. I don't believe you've marked anything else yet, so we'll do that now. 65 and 95. So let's just mark that 65 and 95. 65 and 95 with an IV rank of 62.8. I guess we can mark the longs on as well, 60 and 100. Why not? Let's just do the job properly. That's 100 and 60 is there. So 60 and 100, cool. So mRNA, it's got a lovely IV rank of 62.8. As we can see, IVR is fairly high compared to recent times. We are in the range. Market has been moving sideways a little bit recently after this gap down, and as long as we stay within that range, I think we'll be completely fine. I don't think we've got anything to worry about. Like I say, we're just going to wait for implied volatility to do what it does, and we can always turn this into a iron butterfly if we needed to as a last hurrah, just to reduce risk and also increase the amount of premium we collect up front. So mRNA is a very young position, probably too premature to have an opinion on it at this point. We do just need to give it some more time. So mRNA, all good. SMH, we've been in this for 11 days. We are healthy. We are in a healthy 27.5% profit on this position at the moment. We could, in all fairness, just close this out right now. SMH at 27.5%. So that's a solid profit target. But let's just take a look and see what's happening on the chart. So UAL, as we can see here, sorry, not UAL, SMH, as we can see here, we have had a drop in implied volatility recently. And I'm assuming this drop here is due to Nvidia having its earnings and then all the implied volatility coming out of the semiconductor ETF post announcement. So volatility has been going down. Market's kind of been moving sideways, down a little bit, but not really doing too much. We are up a healthy amount, 27%. IV rank is still fairly high. So in this case, I think what we're going to do is we're going to actually leave this on. We could take this off and just close for a profit, and that's completely fine. But I think we are going to leave this on for a little bit longer. Price hasn't really moved too much. IV rank is still kind of high-ish. So yeah, I think there's more. I think we could squeeze out more. I think we'd be leaving money on the table if we were to close this out at this stage. So what we're going to do is we're going to just leave SMH on, but we are going to be monitoring this closely every single day. If we get a reason to close out, we will close out of SMH. So last but not least, we've got UAL, a nice strangle on UAL. Where are we currently? We've got 48 days left. We've been in this trade for 11 days and we're basically at break even. Let's take a look at UAL, 35 and 50 strikes. There's a 35 put and there's the 50 call. IV ranks kind of just been moving sideways. Market has done a little up and down move here, a little V shape, W, whatever you want to call it. Since we've put the position on. However, we are still very, very far away from our strikes. We're basically at break even. The put side, we are at 50% profit on the put side. Let's take a look at the put side. Yeah, I don't think we've actually moved far enough to be able to roll the put side up and rebalance the deltas in any meaningful way. By all means, let's take a look. So if we roll the put side up, yeah, we're at about 8 delta right now. If we were to roll it, there we go. I don't know why it was getting stuck there, but if we were to roll this up to a 17 delta, would collect about 38 cents. We've got an 83% probability of profit on this one leg. I guess we could roll at this point. I don't think that would be a bad move to roll up to the 17 delta or even maybe the 20 delta. That'd probably be a bit too aggressive for my liking. Maybe about the 17 delta. I'm not actually going to make this adjustment. However, just to show you an example of what it could look like, there you go. But due to the fact that we have still got so much time on the contract, we are only 11 days in, and the price hasn't really moved that much. Although we can still get a successful roll in on the put side, I don't think we're going to be doing that today. We're just going to let theta do what it needs to do and just give the position more time. However, there you go. Now you know how to do it if you did need to do it. And that's going to basically wrap up this video. So we've gone through how you can manage different positions. The main theme here is you want to be managing your winners, and when things aren't going in your favor, just be patient, give it time. Of course, if adjustments need to be made, make them. However, if you don't need to make them, sometimes it's best just to do nothing and let your original position play out. Remember, all of these trades are very high probability trades from the get-go. So most of the time, you don't need to intervene and just let things play out how they want to play out. So with all of that in mind, I hope you learned a lot. This position sizing template, you can get yourself a copy of this inside EDS Premium. Just drop me a message in the Discord group. What you get with EDS Premium is you get access to all of our portfolios, our small and large portfolios, and you get alerts when we put new positions on, so you can emulate our portfolios based on the size of your portfolio, of course. You also get a full course to learn from at the same time, so you can learn and earn simultaneously. You don't require, there's no prior knowledge required for this course. It is a private community, so you can speak with myself, you can speak with other like-minded traders. We're all on the same goal, and there is a 100% money back guarantee. So if you studied our full course, followed our trades for an entire 6 months, and you haven't been profitable, then we'll work with you for free until you are profitable, or you can just request a full refund. So it's completely risk-free from your point of view. Right now, the price is £1 a month. The price will increase for every 5 people that join. However, whatever price you pay is the price that you're locked in at. So if you pay £1 and the price increases, you will only ever have to pay £1 a month, unless if you cancelled and then rejoined at some point in the future. So with that being said, you can get your position sizing template in EDS Premium. Join up. You are rewarded for getting in early. And I'll see you on the inside.